Hi everyone! In this video, we'll show you with real trade examples how you can earn money on funding rates, and not just earn, but also grow small deposits, increasing your deposit by 20 to 50% in a single day using one or several strategies based on funding. We'll also introduce a tool that will help us with this. A few words about what funding is. Funding, or the funding rate, refers to periodic payments exchanged between traders holding open positions in perpetual cryptocurrency futures. These rates can be either positive or negative, and their purpose is to keep the price of the futures contract as close as possible to the price of the asset on the spot market. When the futures price is higher than the spot price, the funding rate is positive. In this case, if you have an open short position at the time of funding calculation, you'll receive a payout equal to the funding rate, while those with long positions will have the rate deducted. Conversely, when the futures price is lower than the spot price, the funding rate is negative, meaning long position holders receive a payout, while short position holders have the funding deducted. That's why we've highlighted positive rates in red color, since short sellers profit, and negative rates in green, since long position holders profit. For now, that's all you need to know about funding. We've covered in detail how funding came to exist in the cryptocurrency market in a big educational article in our Encyclopedia of Trading. The link to that article is in the video description, and we strongly recommend checking it out. What else do you need to know? Funding is calculated several times a day, typically every 8 hours. At 0, 8, or 16 UTC, some exchanges may have a slight time offset, and sometimes exchanges calculate funding every 4 hours or even every 2 hours. The funding calculation itself happens exactly at the specified time. For example, at 00 hour 00 minutes, at 1 second, the calculation occurs, and if you have an open futures position at that moment, the funding will either be credited or deducted. Even if you open a position just a few seconds before the funding time, you'll still receive the funding payout. The only requirement is that your position must be open at the time of the calculation. Now, we need to figure out where to find funding rate information, as we're interested in both negative and positive rates. The key is that the percentage should be as high as possible. A Telegram bot called Arby.Trade helps in this. It shows which exchanges and coins currently have the highest funding rates and sends notifications at a user-set time before the funding calculation, highlighting the highest rates. We'll talk about the bot's settings later. It's nothing complicated. All we need to do is follow the link from the bot to the exchange's trading terminal and open a position. And this is where things get interesting. Let's first take a look at how the market behaves during the funding calculation. We can see that the funding time is in 1 minute and 50 seconds, and the rate is minus 1.28, meaning those with long positions will receive a payout. Let's see what happens next. We can see that the price rises before the funding time. This is due to other traders opening long positions before the funding, as well as short sellers closing their positions to avoid having the funding rate deducted. Closing short positions involves buying, which pushes the price up. Now let's see what happens at the exact moment of the funding calculation when the hour changes. So, the funding calculation. The price drops. This is long position holders closing their previously opened positions after receiving the payout, as well as scalpers who anticipated this movement opening short positions. Then the price rises again as scalpers close their short positions, which involves buying. From this, several strategies emerge for how to profit. First strategy: open a long position to earn the funding payout and then close the position. Second strategy: open a short position immediately after the funding time and close it after the first price impulse roughly equal to the funding rate. Third strategy: open a long position after the first impulse, aiming for 70% of the funding rate size. Fourth strategy: funding arbitrage. This involves opening two opposite positions on the same coin on different exchanges. The key is to have a high funding rate on one exchange, where we'll earn the funding, and a near zero or opposite funding rate on the other exchange. This will be the hedging position. More details on this in our article linked in the description. Next, we'll explore how using just the first strategy, you can increase your deposit by 30% in a single day. We'll do everything on one exchange, MEXC, and even on a single coin. Let's go to the Telegram bot and check the notifications for upcoming funding rates. By clicking the top funding button, we'll see all the upcoming funding rates above the filter threshold set in the bot. We recommend focusing on rates of 1% or higher. It's currently 22.52, and the next funding calculation is at 2300, so in 8 minutes. The bot displays the funding time adjusted to your local time zone. We see that the highest rate is for the coin loom. Let's check the funding rates for this coin on other exchanges. To do this, just click on the coin's name to copy it, then paste it into the message field and send it to the bot. Now, the bot shows the funding rates on other exchanges. On MEXC, the rate is close to 0. Not interesting. Let's look next. Here's the coin fund. Great. It's on MEXC with a funding rate of -1.28, meaning those with long positions at 2300 will receive a payout. Let's head to the exchange. The funding rate and the time until it's calculated are displayed at the top. We'll open the position using a market order, so make sure Market is selected at the top of the trading terminal. Our current deposit is $150. It can be smaller or larger. By default, a 10 leverage is set, meaning we can open a position worth $1,500. For convenience, we'll specify the amount in USDT and enter the volume in USDT. We enter $1,500, so the position will be opened with 10 leverage. Next, we need to set a take profit and stop loss in advance. These can be set either with ROI, where take profit and stop loss are expressed as percentages, or P&L, where they're expressed in absolute USDT values. The take profit should be slightly less than the expected profit from the funding. Since the funding rate is 1.28 with 10 leverage, the expected profit from the funding will be 12.8% of our $150 deposit, so we set the take profit at 10%. Why do this? After we open the position, the price might spike a few seconds before the funding calculation, reaching the profit we expected from the funding. In that case, we'll take our profit without even waiting for the funding payout. We'll show such a trade at the end of the video. The stop loss should be set at about half of the take profit. After the funding is calculated and the price moves down, the stop loss will automatically close our position, so we won't need to close it manually. The stop loss shouldn't be larger than the funding rate multiplied by the leverage, nor should it be too close, as the position might close prematurely with a loss before we receive the funding. There's about a minute left until the funding time. We're preparing to open the position. We should see activity in the direction of our trade long on the order flow. The position is opened. As you can see, the take profit and stop loss were automatically calculated based on the entry price and set on the exchange. Now we wait for the funding time, 2300. 1 second until the funding. Done. As soon as the calculation time of 2300 hits, the funding is credited. Scalpers, long position holders close their positions, short sellers open their positions, and our position is immediately closed by the stop loss. Let's check the result. We earned almost $3, is equivalent to 2% of our deposit. Looking at the trade details, we see that we were credited $18 for the funding, but the stop loss took $15. Why was the stop loss so large? Since many traders were also closing their positions and short sellers were opening trades, there might not have been enough limit orders to buy to satisfy all the sellers and execute the stop losses at the set prices. In such moments, slippage occurs and the stop loss is executed at a price different from the one set. The higher the stop loss price and the earlier the position was opened, the closer to the front of the queue our stop loss will be when other traders' stop losses are triggered. In any case, we earned a 2% increase to our deposit in just 1 minute. Next trade, also on the coin FUN. We see that the funding rate has increased. Great. We'll open the position with 10 leverage again for $1,500. We'll set a slightly higher take profit since the funding rate is now larger. The stop loss will be roughly the same as in the previous trade. There's 1 minute left until the funding calculation. Open the position. At the bottom of the screen, you can monitor the current P&L and close the position manually if needed. 3, 2, 1. Here we go. The price drops. The funding rate is credited, and our position is immediately closed by the stop loss as the hour changes. Let's check the result. As you can see, the funding payout was $30. That's 2% of the $1,500 position volume. The stop loss was $13. So we earned $16 from this trade, which is just over 10% of our deposit. Moving on. The coin TLOS. On MEXC, the rate is close to 0. Not interesting. But on FUN, the rate is 2% again. Great. Same as before. Knowing about slippage will set the take profit and stop loss in absolute USDT values instead of percentages. A take profit of $15 will match the result we got last time. And if it's reached before the funding time, we won't be too upset. The stop loss will be the same. The position is opened. We see the price rising actively, so we can adjust the stop loss a bit higher. 3, 2, 1. Done. Let's check the result. We earned $20. The funding, as before, was $30, but since the stop loss was executed at a higher price, the loss from it was only $9. The net profit is over $13% of our deposit. Again, fun coin on MEXC, another 2% for long positions. Since there's increased activity now, we'll set a slightly larger stop loss with the idea of adjusting it after the position is opened. The position is opened. We move the stop loss closer to the entry point. 3, 2, 1. Funding. Let's check the result. A profit of $11. This time, the stop loss was executed with higher slippage because there was more activity and the coin had been rising throughout the previous hour. So, there were more traders looking to close long positions and open shorts than in the previous trade. Let's summarize the day's result. In the exchange's personal account, you can view all trades, funding payouts, profits, losses separately. We'll select just one day. The net profit is $46. This corresponds to 30% of our initial deposit. And we achieved this with just 4 trades, each taking 1 minute using one strategy, on one exchange, and on one coin. If this isn't an easy game, then what is? Simple math. If you make 4 trades a day, each taking 1 minute, that's just 2 hours of trading funding rates per month. And if you earn $10 to $30 per day on funding, your monthly income will be $300 to $1,000, with a deposit of just $100 to $150. Let's look at a couple more situations. The coin mint has a good funding rate and is on MEXC. But we see that there aren't enough volumes in the order book. The order flow also shows trades happening on tiny volumes. This means that if we open a trade for our $1,500 volume, we'll execute most of the orders in the order book, create a local price spike on the chart, and when our position is closed by the stop loss, it'll be closed with massive, unpredictable slippage. So, if you see a situation like this, it's better to skip it, even if the funding rate is high. Let's look at the coin Ergo. A super high funding rate, one of the highest possible. It's on MEXC. The coin has high volatility. We'll try to handle this situation with a few trades. We'll set a limit order about 3-4% below the current price to catch the impulsive downward movement after the funding. For this trade, we'll use a volume of $1,000. Since our deposit now exceeds $200, this corresponds to roughly 5 leverage. We'll use our main working volume of $1,500 for the funding strategy as we've done before. We set the take profit at an absolute P&L value of $20. If the take profit is reached before the funding, we'll still profit without waiting for the funding. Due to the high volatility, we'll temporarily set the stop loss at the same level and adjust it closer later if needed. There's 1 minute left until the funding time. Activity remains high. Position is open. The price continues to rise and approaches the take profit. Our position is closed by the take profit, so we've already earned a profit, but there are still 15 seconds until the funding. We set the same values again, but we can skip the take profit this time. We immediately open a new position. So, funding time. Done. The position is closed. Since the price rose significantly before the funding, our limit order didn't execute on the post-funding impulse, and we couldn't capitalize on that movement. But we still managed to earn double profit from 2 trades. Let's check the results. Here's the first trade, where the position was closed by the take profit before the funding calculation. We earned $22 from it. The next trade was the funding strategy. The funding payout was $45, but due to high volatility, the stop loss was $27, so we earned another $16. From this entire situation, we managed to earn nearly $40. That's another 26% increase to our initial deposit in just 1 minute. A bit about the bot. In the bot, you can choose which exchanges to display funding rates for. By setting a minimum funding rate threshold in percentages, the bot will only show coins with an absolute funding rate above your set value. You can also set the time before the funding calculation for the bot to send notifications about the highest upcoming rates. Setting it to 8 hours means the bot will send rates around the clock, which is too much. For example, for situations like the ones we covered in this video, setting it to 15 minutes is enough. This way, the bot will send the highest funding rates 15 minutes before they're calculated and won't bother you the rest of the time. During those 15 minutes, you'll have time to evaluate the coins from the list. Choose a strategy and calmly prepare for the calculation time. The bot also has a brief guide on trading and using the bot. But again, for more details, check out our article linked in the description. All subscribers to our Telegram channel get free trial access to the bot. The link is in the video description and in the bot itself. A few words about MEXC and why we traded on this exchange today. MEXC is currently the top exchange in terms of liquidity volume and the number of traded coins. Secondly, there's a promotion right now. If you register on the exchange using our link, you get a 20% discount on all trading fees. Plus, if you deposit $100, the exchange will credit $15 to your futures deposit, which you can use for trading. Essentially, MEXC will cover the cost of full access to the bot for a month. Moreover, trading on the exchange doesn't require KYC verification, meaning you can create as many accounts as you want, even if you already have one. You know what to do. Wishing everyone super funding rates and consistent profits.